When you think of the one single point that is taking up the most of your wealth, what do you often think about? Is it the $5 you're spending at Starbucks every day? Is it the movies you're going into, the entertainment expense? Is it the wild, crazy concerts that you're getting? Or is it the home, which is the most expensive? Nope, that is not right. The number one wealth killer that no one talks about is your automobile, guys. Now, when you think of an automobile, the price of automobiles have went up significantly, and they continue to go up significantly with an asset that depreciates, and it depreciates at a very, very fast pace, which is the reason why vehicles over the years will kill your wealth. Absolutely. Now, of course, number one, you need transportation. But what does that mean exactly when you need transportation? You need a car that'll take you from point A to point B that is reliable. You don't have to worry about breaking down. You don't have to worry about anything of that nature, but this can come with a price tag. Are you looking for a car that's $20,000, $25,000 that you could possibly get brand new or even used as in a year or two old? Are you looking at 30, 40, 50, 60, $70,000? When you're looking at a depreciating asset within the first 3 to 5 years, you're losing almost all of the value of the vehicle that you are putting the money into. So looking in 2023, car prices are up again 2.5% in January and over 16%. That is right, 16% is the price increase that we have seen in 2022. Now of that, we have seen a massive reduction or a massive price reduction, again, in the depreciation of these vehicles. Now, lastly, the cover of ownership or the cost of ownership for these is roughly around $11,000 a year. So not only are you paying, this 30, 40, 50,000, this 16% increase for the cost of a vehicle in 2023, as the demand continues to increase, we know here locally that there is going to be a strike, again, driving prices right through the roof for these automobiles because the demand for them is going to go up as the supply continues to go down. But then you tack on almost $11,000 a year in just the operating and the maintenance costs. So when you look at gas, when you look at oil changes, things of that nature that people do not take into account, vehicles are super expensive, guys. If you're not buying a vehicle, keeping it 8 to 10 years, you are never going to get your money out of it, which the average amount that someone is keeping a vehicle is 23 months. That is right, guys. With the amount of people that lease vehicles or buy vehicles, like to exchange vehicles out, it is roughly 23 months. Now, in this case, over on medium.com, they use a 2018 Honda Civic. Owning it for 5 years is around $44,000, which is just shy of $8,800 a year. Purpose they chose this one, guys, was it's not crazy expensive. Now, looking at this in an average American salary, which is $54,000 a year, you're using 16% of your gross income just to afford the Honda Civic at a $44,000 price tag. That is right, guys. You're taking up 16% of your income. Now, when you look at this kind of big picture, the 50-30-20 rule, 50% of your income is the necessity. Now, 50% of that, of the needs category of the 50-30-20 is including your transportation. So 50% of that, 16% is eaten right off the top, literally just for owning a car every single year, every single month, 16% is coming off of that, guys. Now, if you look again, big picture, when you look at the housing expense, most people are spending 20 to 25, if not a little bit higher, 30+ % of the 50% in just the housing. So again, when you look at that need category that's made up of all the things you need to live, you're spending between a home expense and an automobile expense about 40 to 45. For some people, it's 50. Some people, it is 50+% of that category. So the actual cost, this is where they break it down, guys, and I really want to focus on this. The biggest expense of most vehicles are depreciation. 99% of cars depreciate with regular wear and tear as time goes on. As you're putting miles on a vehicle, depreciation, they are getting hit with it. And the car depreciation is one of the biggest reasons why investing money into a vehicle is a horrible idea, because it is such a fast appreciating asset. Essentially, when you put money into something that is bound to go down, if you want to save money in this category, not buying new cars is one of the ways that you can counteract this. Again, when you drive a car off the lot, it loses roughly 15% of the value. That is right, guys. It's insane to think about. When you think of, I bought a $50,000 car, I drive it off the lot, let's say depreciation drops 15%. You might as well just throw that money straight out of the window for buying that new car, because 15% just came out of there. Now, when you start coupling that with miles, the more miles you drive, if you do have a commute, is going to drive that value down even further and faster, especially if you have any maintenance, if you have any repairs, any dings, anything that is physically wrong with the car that you're going to have to repair. Again, that is a bill that you're going to have to foot. Now you couple on this the taxes and the fees of ownership, and you also have to have tags, you have to have titles and all that. Here in Michigan, guys, we pay about $280 for the tags every single year, so you can go ahead and add that on. Now with that $50,000 vehicle here in Michigan, we have a 6% sales tax. Boom, you got to pay that taxes every year. Boom, you got to pay the registration every year. If you have multiple cars, you're going to have to pay multiple registration. And there's going to be, of course, some sort of tax that kind of comes with it. If you're buying gas for the vehicles, if you're doing repair work, there's going to be a lot to really sink into here. Then overall, you couple in the financing. Now, financing back in March of 2022, so about a year and a half ago, was about 5 years, was 1.74. Fast forward to today, the rates as of today are 6.49. That is right, guys. We are over 3 times the rate that we seen almost a year and a half ago. So now again, you take that $50,000 car, you finance it over a number of years. Even if you have A+ credit, that $50,000 car, you're adding $55,000 to $57,000 in there. Then you throw in your taxes that you're paying on there. You're paying roughly $8,000 to $10,000 in interest if you keep it the 5 years you finance it. And hopefully you don't have to keep it longer than that. Now, what does that mean, guys? When you put in the vehicle of the car, when you put in the financing, you're looking north of $1,000 payment, almost $1,200 when you do a $50,000 car. Now, with the interest that you're paying on this vehicle, you're essentially paying down not only the principal, but also paying the interest. But then you coupled with the depreciation that you're getting for the vehicle, the cost of ownership of the vehicle is astronomical when you look at the big picture. This is the reason why it is one of the absolute biggest wealth killers, guys, because when you look, again, big picture, and that is the way that I see it, if you're getting a new car every 3 to 5 years, the value of the car that you're trading in, for instance, we bought a $52,000 Explorer. We've had the Explorer now for 3, 5, 6 years. It has been 6 years. Value of that is $18K based on having 60,000 miles. That's right, guys. From 52 all the way down to 18, that is where it sits as of right now. And that is in perfect condition if you look at a dealer selling it, which means theoretically, if we're looking to trade it in, you're talking about 15K. If we trade in the 50K, let's say we go right back to that 52 mark, but now we have the 15K to put down. We're still financing, what, $37,000 at a much, much higher interest rate just to go through that cycle of depreciation again and again and again over the next pretty much 30 years, pretty much your entire life. That you need transportation, which is the reason why, guys, when you're buying cars, number one, we don't lease any cars. Personally, I do not find value in leasing. You're essentially just borrowing the car and paying a very, very high payment for a borrowed car just to have the maintenance taken care of. We buy our cars on average. We keep our vehicles 10 to 12 years, which means I took the vehicle loan out for my vehicle. We paid it off in 2.5 years. That is right, guys, 2.5 years. That way, not as much was eaten up with the interest, even though the interest was pretty low. But getting that paid off in 2.5 years gives us 10 years of just owning that vehicle. Whatever the value of the vehicle might be after those total of 12 years of ownership, I'm not too worried about, guys, because I got 12 years of use out of that vehicle. Definitely a huge, huge recommendation to buy the vehicles versus leasing them, because this is the #1 killer of wealth that nobody is talking about. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.